Hi, and welcome to Your Prosperity, a podcast series on financial topics including tax, wealth creation, superannuation, lending, audit, and many other things that we deal with here on a regular basis at Prosperity Advisors. As with all financial podcasts, any advice you hear in this is general in nature and not to be relied upon. Please contact us for any specific advice. Hi, and welcome to the podcast. It is the 12th of January, 2023. Happy New Year, everyone. I'm Brendan Campbell, as always, and I'm here with Harry Charalambous, who's one of our managers in the Brisbane office, works in the BS&T, so business services area. And today we're going to talk to you about why your next car should be an EV and some important legislation that just dropped in December or got finalised in December. And any regular listeners of the podcast will know I've been excited and harping on about this for a little while. So, Harry, thanks for joining us.
Hi all, thanks Brendan, thanks for having me.
Harry, talk us through it. EV legislation, electric vehicles, plug-in hybrids. I've been rabbiting on about it, but legislation just passed November/December. It's got royal assent now. It's through the door. What are the key details? What's the important bit out there to get the basically a huge tax deduction?
Yeah, well, you're right. It's been going around for quite some time now. I think this first came out at the start of the financial year in July sometime and finally got royal assent and passed in December last year.
Well, even earlier, I think when the election, it was one of the election promises, I think, at some point. And then as soon as the new government got in, they went for it. And
it really pushed for it. I think it
just took a while to get through.
Yeah, exactly. It just took them their time. But basically, it's to incentivize people to buy EVs and plug-in hybrids and whatnot. So it's designed to give employees effectively a tax deduction for buying an EV immediately rather than having nothing available to them. So in an ordinary situation, you buy a car, and if your employer is the one paying for it, there's things like fringe benefits tax that have to be paid, which basically nullifies any deductions that you're going to get. But the government have basically removed that FBT requirement to force this through. Yeah.
So normally, if you're, and it's, I know you mentioned for employees, but I guess the benefit is provided to employers, and then they provide a vehicle to their employee. But yeah, if they buy a internal combustion engine, then there's fringe benefits tax they've got to pay, and fringe benefits tax, I guess, is based on that premise that, you know, if someone's on a $100,000 wage and the employer goes, well, I'll give you an $80,000 wage and a $20,000 a year car, people go winning, and they only pay tax on the 80 grand. Well, that's a huge benefit. Some would call it a fringe benefit, exactly, which is why fringe benefit tax, they tax those sort of things where there's a non-cash and the monetary sort of benefit provided to somebody, then that business has to pay FBT. But as you said, the government's now said, well, if it's an EV under certain situations, then there is no FBT. Therefore, employer can provide said employee with a vehicle, and it's kind of a win-win. And the employer gets the tax deduction, but depending on your structure and, you know, maybe a salary sacrifice, we'll get into that. But salary sacrificing, or you own the business, well, it's basically a good benefit to you. So yeah, sorry. So I've cut you off there on a bit of a tangent, Harry, but what are the key details of this?
Yeah, so the key details, I guess, primarily is the car has to be first held and used after 1 July last year. So they have backdated this back to around the time they first announced it.
Yep.
And it's eligible for plug-in hybrids and EVs and hydrogen cell vehicles, which there aren't a massive amount of those around, but they are.
I haven't seen many of them on the roads, but yeah.
There are some quirks with how that works. EVs get the full benefit. The plug-in hybrids only up until 1st of April 2025, where they'll phase those out, because that was one of the, I guess, sticking points with this bill and why it took so long, because the Greens did not want these vehicles in there at all, but they've managed to get it through.
Because they still effectively, I sort of get where they're coming from. You could have a plug-in hybrid and actually just never use the battery and just use it as a petrol car.
Yeah, I guess for those that don't know what a plug-in hybrid is, it's basically got both engines. So from what I've seen on the market, the plug-in hybrids don't have a massive electric range. It's usually under 100 kilometers, which means that unless you're charging it every single day, you're probably going to use the petrol engine a fair bit.
Yeah, I reckon there's a demand for it, though. I've sort of been talking about this with a few people. I think so. Some have got 80k range, and if you're a city person and you're just around the office and to and from your work, and kids run or whatever you're doing, really, you're probably only doing 40, 50 Ks if that a day. You wouldn't be doing more than that, imagine. And if you plug it in, just get it at night, plug it in, juice it up. You could pretty much run on the battery. And then when you go on a big trip, kick in the engine. So I don't know, I'm starting to come around with the plug-in hybrids.
In a country like Australia, I think plug-in hybrids are going to be very successful because we have such large area to drive. Even something in Brisbane driving to the Gold Coast and back, that's an hour each way.
Yeah, that's right. Well, you can't do that on an 80K range tank on an 80K range EV, but a full EV on a 400 or 500 range. Well, yeah, absolutely, that's no issue.
Yeah, exactly.
So
the other key part of all of this is it's employers, and that FBT is still calculated. It's just not taxed. So when you do lodge a tax return, it does form part of your income like any FBT benefit would. However, it's non-taxable.
Yes, you don't pay tax on it, but it might count towards your private health rebate, or if you get any concessions from the government or private
family tax benefit, things like that.
Family tax or child support sort of stuff. It'll count towards all those things, but it won't be taxed.
Yeah, exactly.
So it's from 1 July 2022. It's EVs and plug-in hybrids, but that, just be careful anyone out there who's not really thinking about these things. It's not a normal hybrid like the RAV4 hybrid or something like that, or whatever it is, or Prius. They all run off of petrol with a battery in it. It's got to be something that can charge. You've got to plug in and charge it from electricity to charge the battery. That's the important sort of thing, or the hydrogen, which
correct.
I'm not talking about because no one has those, but yeah.
And the other key part of it that I haven't mentioned earlier is the price. There are limits. The starting point is 84,916, which is the fuel efficient car limit the ATO has provided. However, one of the key parts of this is that the car price has to be the original car price when bought new, not when you buy it secondhand, which may catch a few people out moving forward. Yeah,
that's right. So if you're buying if someone buys a car for 90,000, then sells it to you 2 months later for 84,000, you're not getting through.
Correct. Yeah.
Yeah. But if you're buying a car, I mean, for anyone going out there looking at it now, wanting to buy a car, if you're buying a new car, it's an EV and it's under 84,916, whatever it is, then and the employer is buying it and providing it to the employee.
Correct.
Then we get a tax deduction. But there's a little caveat. I guess the tax deduction is not the full amount either, necessarily.
Yeah, because the 84,000 is purely a luxury car limit, and that's where luxury car tax is calculated, things like that. But from a tax deduction point of view, the ATO's car limit is still only 64,000.
Yeah, so but it's still pretty good. I mean, basically that means if you buy a $75,000 car, the company or the business, the employer, is getting a tax deduction still for $63,000, just not the full 75.
Yeah, exactly right.
The other side, I guess, to think about too is how you claim that. So at the moment, if you're buying that before now and you take delivery and you've got possession of the vehicle before 30 June, then the business would get that immediate deduction, which is now called, whatever it's called, Harry, that new
temporary
terminology. That's one, temporary full expensing.
Yeah.
Thank you. They changed that name a couple of times. So temporary full expensing, then you could buy the $70,000 car and claim the $63,000 straight up now, or $64,000, I think it is, sorry, the email. $64,000, you could claim it this year as a tax deduction, the whole lot. If you're running your own business with employees, this would be. You can claim that whole amount straight up, which is really cool. If you take possession after 1 July, I guess the other side's still fantastic, but you're depreciating it. So, say 25% diminishing value method, you're still claiming it. It's just over a number of years that you're claiming it. Or if you're leasing that vehicle through a salary sacrifice through your employer or something like that, then you're just claiming the lease payments, but you are still claiming it, maybe just not all of it in the first year, which can be a huge deduction, but definitely still a huge advantage to be able to claim it over a number of years, and just no FBT payable, no personal contribution from the employee required.
Yeah, exactly right. And on a $60,000 car, that fringe benefit tax is anywhere from $4,000 to $6,000 in extra tax you have to pay. So immediately a business is getting that as a saving. A self-employed person through a business, $4,000 to $6,000 straight away just on a $60,000 car.
Oh, and more than that, and then that's I guess the difference between If you were buying a petrol vehicle through a salary sacrifice arrangement, you had to say that 20% stat method where you've got to make an employer contribution. That gave you a little bit of benefit as well. Around the numbers on a $60,000 full EV, you're saving about $9,000 a year in tax, which is pretty big,
Yeah, it's
really.
massive.
And that's over, year on year. It's over a few years you're doing that. That's say on a 5-year lease. So
yeah, that's on a 5-year lease, and that's only earning, if you're a low income earner or medium income earner at $90,000, if you're earning even more, that tax saving can be even higher at your personal tax rate as well.
I think I ran mine at a higher rate. I can't think what it was, but it's a massive saving, and basically the car is tax deductible. And because the business is providing that car to the employer, the rego, insurance, servicing, not that there's that much servicing on it, there's not really much fuel to pay, but there might be if it's a plug-in hybrid. All of those costs then are tax deductible as well to the business.
Yeah, 100%. There's no different to having a business car provided to you. It's exactly the same thing, but it's not a business car.
Yeah, that's right. And you can openly tell the tax office this is provided to an employee and they use it privately. Tick. It's as long as it's provided to them in their capacity as an employee, then that's all it needs to really be. And some of the benefits, I think, or some of the uses for that, there's if you can salary sacrifice from your employer, that's open to do that. I think one of the big ones, a lot of my clients being Medico, is a lot of the doctors who are probably not necessarily sole traders, but we'd often run ours through a trust structure where they're self-employed through their own trust. It works perfectly for them, and that they can provide themselves effectively as an employee with a vehicle through the trust that employs them for their medical billings and their costs, and they get an immediate tax deduction for that. Particularly if before 30 June you write the whole thing off, but if it's after 30 June, well, that's still fantastic. You still get to depreciate that vehicle over the next 4 or 5 years, and you've got an EV that's probably costing you less to run, probably costs you a bit more to buy it, but most doctors are probably pretty supportive of trying to go down that environmentally friendly line anyway. So
yeah, exactly.
It's a bit of an easy one to talk to people about and talk to clients about, I must admit.
Yeah, it's a super easy conversation to have. I think everyone in this day and age is looking to save $1. And if you can make the tax man pay for it and save a few $1,000s and you get a brand new car out of it, then why not?
That's right. And if you borrow, the business borrows to buy that vehicle, the interest is also deductible. So I guess a lot of it's a conversation we're having with a lot of clients. For anyone out there who wants to chat more about it, I think you need to probably just ring your accountant or ring us, hopefully. Have a chat about it. There is, just make sure you get it right, because little things you get wrong can completely destroy it. You don't put it in the name of the business or the employer. You don't put it in the name of the employer, zero benefit. It's gone. It's 85,000, not 84,900. Gone. There's no first 84s in it and then anything over it's not. It's a hard cutoff. It's out. If you don't set it up and do it right and don't put all the rego insurance things, that should be named of the employer as well. If it's not done in the right way, you just basically won't get it. But if you can get it done in the right way, winner, chicken dinner, it's a fantastic deduction to have. Shout out to us. I guess we can get, we help you out with the finance and the car buying. We've got a car buying agent who's been on the podcast before. He can go find you the car. We can help you get the finance set up to get that sorted. And then, if you're interested, it's still a cost. You're still spending money. So don't just go out and think, I'll buy this car because I'm getting a tax deduction. At the end of the day, you're still dropping 60, 70 grand on a car. Yes, you're getting deductions, but you are effectively spending money on a vehicle. So it's not going to give you back all the money you spend. But if you're in the market for a car, or you're thinking about a car, or you're due to get a new car, I can't see why your next car wouldn't be an EV. Well, unless you're towing a caravan, because they're absolutely useless for that. But aside from that, I can't see why you wouldn't be looking at an EV for your new car. Harry, what are your clients talking about? What situations are you finding?
Yeah, look, a lot of my clients, they do a fair bit of driving, so the EVs haven't really come up a great deal, but definitely the plug-in hybrids have created a lot more conversation now. They're definitely included in this legislation, so that conversation is definitely being had and thought about a lot more. Again, you bring up the caravan situation, the towing situation. If I've got a number of clients that are on farms and things like that, so it's not an option. But those that aren't using that, it's definitely in the thought process.
I guess if you go the plug-in hybrid, that I don't think there's any four-wheel drive plug-in hybrids out there. Maybe I'm wrong, but I don't think there is. But if you got the Mitsubishi plug-in hybrid, the big Outlander, that could still tow a caravan. And when you need to do that, you're on the petrol, and when you're around town, you're on the battery.
Yeah, exactly. There are a number of the plug-in hybrids that are coming out in that bigger range. I've got a list of in front of me right now, and there's some very large cars on there. So they're definitely starting to come through.
And I think over the next 2 or 3 years, there'll be so many more electric options, or low emission, zero emission sort of options out there, whether it be EVs or plug-in hybrids. But as you said, that the plug-in hybrid, you kind of want, if you're thinking that line, it really needs to be done in the next 2 years. You got to do it, or next year?
Yeah, well, April 2025 is the cutoff, so it's only a bit over 2 years now.
But it's probably a 1 year wait list on some of those cars anyway.
I was about to say the wait list is anything from 6 months onwards, sort of thing, for these cars. So
if you're thinking a plug-in hybrid, you probably got to start doing it now. And if you're thinking EV, well, you can do it now, or you can wait and see what your options are. But there's Tesla Model Ys are out there for 70 odd grand, 72. They qualify. Nissan Leafs, whatever. MG little ones.
There's heaps of cars at the moment. They range anywhere from, I've got a list in front of me again, 45,000 for the low range EVs, which is the MG and the BYD, and they range up to 350,000 for a Porsche. So there's a lot won't qualify. I think it might just fall out of the range.
That's right. But even I think there's a Mercedes EQA that's about 79, maybe. I think that's just under as well.
But with this legislation passing as well, I imagine the car dealers will get onto this as well, and potentially try and price their cars under this limit.
Agreed. Yeah.
In that range.
Yeah, that's right. I would imagine that's exactly what's going to be happening, and if not, people will be asking if it can be under that. And but it'll be if you're close to the line, just make sure you get good advice on it and make sure you're getting it right. And look, talk to your accountant. Don't just listen to this podcast and go buy an EV and say think you're getting it. You've got to make sure those things are done in the right way. It's got to be the employer providing it, provided to the employee in capacity as employee. It's got to be under that number. It's got to be an EV or plug-in hybrid. Got to take, it's when you first take possession of it and use it. There's little things you've got to get right. It's really important to get those right. So, fantastic news. Really great that it's out there. Harry, what's the best way to get in contact with you if someone wants to give you a ring and have a chat to you about EVs?
Yeah, best opportunity. Give me a call or an email. Best number is 07 3007 1900. Or email me at harry@prosperity.com.au.
Perfect. And myself, bcampbell@prosperity.com.au. Jump on the website, follow the links, like and share, let your friends know about it. And I hope everyone got something out of this. I'm excited it's passed. It's fantastic, and hope everyone's considering their new year, new EV, and getting on board and doing something good for the environment as well, which can't hurt that you're getting a deduction for that as well. I'm loving that. I guess these incentives coming from the government seem to be all employer based. Like the cash flow boosts, EV incentives, they're all employer based things. So it might be worth talking to your accountant about seeing if you are maybe even a sole trader, like a lot of medicos would be. Just make sure you're sort of in the right structure that gets you access and benefits of these sort of concessions that are coming out. So, Harry, thanks for joining us. Thanks everyone for listening. Like and share. And if you want to listen to any other podcasts and series, jump on the website, click the link, subscribe, have a listen. Thanks, everyone.
See you later.
Thanks for joining us for today's podcast. Hopefully you liked it. And if so, please give us a few stars, like and share. And if you'd like to follow the series, please subscribe and pass any information on to your friends as well if you think they might like it. For more information about who we are, head to prosperity.com.au and follow the links.